Hello, hello, hello. Welcome back. That is such Zen music at the start that just always gets me like half like I'm like nodding off here. Just like you are on mute, friend.
I am.
There you
Hello.
are. Welcome back.
Hi.
Where
How
doth
are you doing?
thine hail from on this fine morrow?
Methinks I'd be. I'm on a tiny island in Greece. Actually, I
Ooh.
left the hot Texas summer for what goes by hot in these parts over here, but it is refreshing. to
Yeah,
say the
that
least.
ocean breeze, I imagine, is a nice touch.
Yeah. It's a bit of just a self-imposed isolation sabbatical. Just go be in a small house on a small island with nothing to do but eat tuna and write code. It's been great to get out of
Yeah.
the city and into the country.
I bet. You're coming through a little foggy. We're going to blame the Greek government on that. So no worries. We got you. You're clear as day on the audio, which is important. And I will be the shiny high definition face for today.
It's amazing sometimes to think that the internet just works and we could be this far away from each other.
It is. It is wild. Instant. It makes me think about movies like Dune and Star Wars, and you think about communications at that scale, it just wouldn't work. You need speed of light to matter, and speed of light is pretty good on planet Earth.
What we're doing right now is better than the kind of communication they have in Star Wars. It's always like grainy and crackly and monochrome. Yeah. We've already gone beyond them, at least when it comes to telecom.
When you think back to what they imagined the future was like, it's like, yes, we can travel through space, but we haven't cracked 4K definition yet.
Yeah.
It doesn't add up, but the new movies have figured out. So.
Oh, they do. They have actual RGB.
I think so. I don't know.
Are you sure?
I'm not actually. I haven't watched all the latest ones. There's been 3 or 4 probably that I've missed on Star Wars. My kids aren't old enough to watch it. I'm going to go through it all. You know what? We're going through Jurassic Park right now with my 4-year-old, which I know sounds a little scary, but he insists it's not scary. I was a little worried. I was like, "Are you sure?" And he's like, "Nah, shh, I'm watching. It's not scary." So we're on Jurassic Park 5, and I am thoroughly enjoying watching cool movies with my.
So he was able to sit through the first one without.
Yeah, that was the one. I was like, and the first scene, the guy's arm gets bit off, and then he gets eaten, and I was sitting there like, this is a mistake. This is not ideal. And I look over, and he's just like, and and I just play, and I was like, oh look, the dinosaur's having a snack, and anyways, by the end, he was just like, I want to watch Jurassic Park 1 again. So we watched that one about 3 times, and then I got sick of it, and I said, okay, we're going through. There's 7 of them now. So yeah, that's been my life. Every night's movie night. It's summer, so around 7:30 when he's supposed to go to bed, around 8, and then I'm just like, let's go watch Jurassic Park.
At this rate, maybe by the end of the stream, there'll be an 8th one.
No kidding. Yeah, well, the latest one just came out. I hadn't even seen the 5th, 6th, or 7th. So I'm now into a zone where I'm like thoroughly enjoying it, which is nice. It's a nice change up from Miss Rachel. Let's be honest. I can't wait for I can't wait for good movie times, and it's finally arrived. So that's nice.
Well, no spoilers on the plot. I have an idea with the
dinosaurs eating people who.
I should specifically ask you.
Yeah. So that's my evening. That's my evening stuff. Daytime has been filled with phone calls. Somebody in the Discord the other day asked, like, hey, what's going on? And I just took a little screenshot of my calendar, and some people, I think there's an obsession around the world with Thursdays. Something about Thursdays. You're like, hey, let's chat this week, and everyone's like, Thursday. So Thursdays have been very exciting. Most days pretty exciting, but Thursday's particularly exciting. Been focusing on partnerships, integrations, looking for people who want to work with us, and getting some interesting traction from interesting places. Nothing, that we're going to talk about specifically today just yet. We're so close to a couple very interesting specific ones. In fact, we have our first DAO commitment. That's the one thing I'll say. I won't say which one, but we have a DAO commitment who has said we would like to buy future revenue from you so that we can accumulate the ANA token in our treasury. and that excites me. So I'm very excited to get that inked and talk about that. But I'd say it's pretty much final. It's just a few I's and T's that need to be sorted before we come out and chat about that in depth and on Twitter and across platforms. So that's been very exciting for me. It feels like a big win to just lock in the first. Someone had to go first, and we found one who did.
Yeah.
Favorite part of the story, ANA is a fantastic treasury asset. I've always thought so. I put it in my treasury, and the reason I like it is because you can borrow against it. You can access cash tax efficient ways without having to sell the underlying, and then it's kind of a self-repaying non-liquidatable loan. Like, how sweet is that?
It does certainly tend to outperform U.S. treasuries. That's something to hold in your treasury.
Yeah. And access to cash. That's the thing, right?
I know.
ETH was a huge treasury asset at late 2017 because of ICO season. Everyone was raising money in ETH. ETH was a fundraising instrument, and they found out the hard way, many of them, that once you raised that ETH, you should probably sell it. It's like, hey, we raised $40 million. And it's like, well, now it's 60 million. Now it's 80 million. So and then let's keep speculating. And I forget offhand the name of the company that marked the bottom like the next year, but they announced, well, first of all, they didn't sell their ETH. So they raised a bunch of money. They kept it in ETH. All the companies started to liquidate their ETH to fund their operations, as they should. And there was one, I feel like it started with an S. Anyways, they announced on Twitter that they were going to take their remaining ETH and start leverage trading with it to make up stuff. And they shorted the bottom. Oh, I wish I remembered the name. It was sad. It was funny though, because that was the exact low, and ETH was like $80, and it was just like, whoa. Anyways, not shitting on ETH. I'm a big fan. It's my third largest holding right now, as of about 4 weeks ago, and I'm a huge fan of what they've got going on there. But as far as a treasury asset goes, if you wanted to use it to fund things, you had to sell it to cash. And and so ANA, from a treasury perspective, you don't have to sell it to cash. You can borrow against it. And I think that's a fantastic thing. So I'm very excited to announce that we have got our first DAO with making those intentions into the future. And we will have names, and you'll see it on Twitter probably within 2 weeks. But
yeah, it was a natural fit. Oftentimes, traditionally, although these days with things like strategy, the term treasury is sort of stretching at its definition. Oftentimes, a treasury for a company is money that you expect to still be there a year or 5 years or 10 years from now. It's something that you want to store the value. And most companies in the world keep their treasuries in dollars or a U.S. Treasury note for exactly that reason. That it'll still be there. And the interesting thing about ANA, well, there are many interesting things, but one of them is that the worst case scenario is that it's a stable coin. The absolute worst case scenario is that it's just a stable coin.
Far too stable, sir. That's not the worst thing that could happen. It's true.
And so this idea to park your money in something that has infinite upside, or at least undetermined upside and limited downside, makes sense to me, and it makes sense to that DAO. What a great place to load up your cash and make it productive in the meantime. I've been thinking a lot about these. I guess the acronym that's been selected is DAT, Digital Asset Treasuries, that are out there.
I'm really glad you said that, because I didn't know what that stand for. I knew what it was referring to, but I hadn't figured out the acronym yet and didn't care to look it up because it's not something I care about. But
I know stuff on crypto Twitter. It's like mushrooms after a spring rain, or like 48 hours later, you see this new word, this neologism everywhere.
My debts, my ICOs, my IEOs, my IDOs, my debts.
Is it really as prevalent right now as I'm being led to believe it is, that there's just new DAT companies springing up left and right?
It's pretty hot. And I don't know where it is in its own little cycle, but it feels, I don't know. I dare to say late, but I did speak to somebody a month ago who had already made a lot of X's on a few different treasury plays, and their vesting was about to begin. And they were talking to me about this time's different, this thing, these things are forever. And I was like, oh, I thought I was early, but maybe I'm late. So I don't know. I don't know if there's just a washout. I mean, I assume that there's a washout at some point, because this is how humans work. There's opportunity. We come in, we copy things that are working really well, and they copy, and then the liquidity that was available for those opportunities spreads horizontally and thins out. And then a few people say like, oh no, I'm going to take profit, or oh yay, I get to take profit. And then and we go through cycles. And so it has happened with every single thing ever, specifically in crypto, especially in crypto rather, whether it was NFTs or meme coins or utility coins, treasury companies, ICOs. There's just only so much capital in the world. And now the sad thing from a investor perspective, which I am, is that there's this burning desire in people's hearts to just take what's working and make a new one of it. Not necessarily invest and contribute to something that exists, but copy, paste, and redo, because I want to be early. I want to be first, and I want to be part of the new thing. And so that's when you get, like a billion copies of whatever, whether it was PFP NFTs or anything else. And then the capital that's available to speculate on such things just gets spread out and they all collapse. And then, so these treasury companies, I am hopeful it's different in the sense that they're real companies that generate real yield that's not entirely based on number go up, because if it is, that's where you run into trouble. But I will not sit here and tell you I'm an expert on the topic. I hold a few, bought some Tom Lee shares the other few weeks ago, bit minor, because I just like Tom Lee. I've liked Tom Lee since like January 2018. He put out a thing called like the economics of cryptocurrency or something. And it was like a 20-minute presentation on a stage. And he talked about the generational wealth kind of cycles, the millennials are coming into their investing years. And he was doing these big long-term macro projections on Bitcoin. And he coined like a $10 million projection for like, 2030, 2035. And I thought that was really interesting. I've liked him since that video. So the fact that he's kind of come out now and he's Mr. Ethereum, I think, it's fine. It's pretty cool. So yeah, I've dabbled in a few just in my passive stock account, but yeah, the people I talk to, they're like, they've been in from pre-sale prices. They're up 4 to 100x, and their vesting starts in September. And I'm like, I'm not touching that shit. So we'll see. It's certainly injecting a ton of excitement in the market, which I love. And right now it seems like Ethereum has taken the reins. ETH BTC Cross is rallying for since May 7th against Bitcoin on the 3-day. So yeah. Can you tell I used to do TA streams? I'm just fiending to put a chart on the screen and be like, well, you can see here that the momentum picked up in early May and doesn't seem to be slowing down. I would love to do a TA stream. Maybe I should fire one up on this channel for fun.
Maybe.
Back
Yeah.
old chops.
Feature what a Bollinger Band is.
Yeah.
Yeah. I guess we shall see. We shall see. Anna would sure work quite well for one of these, because I guess the looming fear, each treasury company kind of has its own genome. They're not all exactly doing the debt-based approach that Michael Saylor's doing, but they all depend on the number not going down too far.
Yeah.
There's sometimes comparisons made to the Luna UST whirligig. Not exactly apt, but there's a family resemblance where you have two assets. One of them's a stock ticker. The other one is just an asset, Ethereum or whatever, and they're independent of each other. But one of them is supposed to have its value derived from the other. What's the NAV for the company? What do they have on their books? And that informs the price of the stock ticker. But the ticker is free floating. So if people start selling it, it can fall beneath the NAV of the company, which doesn't truly mean anything technically, but it can mean something quite a bit psychologically. And the worry with these debt-based ones is that you could have cascading liquidations. You just get so big and big and big. And this is not a Ponzi, but a bubble is more precise. That just the leverage makes a situation where the bigger you are, the harder you fall.
Yeah.
Looking into it and thinking, if only things had floors, then you could have leverage, but not the looming sort of Damocles with these cascading liquidations.
It seems
so I think
inevitable.
Think tread carefully with these. They might unwind in a right hurry one of these days.
Oh, I'm sure they will. And it's anyone's guess when, but it's not about because they're bad individually. It's like I was describing earlier, the effect of people, rather than buying one that's doing a great job, I would rather go in and create a new one. And that's going to spread liquidity thin. And yeah, look, markets are markets. I say it all the time. You just can't fight fate. You can't, eventually capital runs out. There's a great idea. There's a certain amount of capital that's interested in at these levels. And so the value rises. And you get to a point where there's a lot of potential sellers, but there's not really any more interested buyers. People want discounts. Smart money likes discounts. It's inevitable. So yes, it will bubble. Who knows how high, who knows when, and it'll crash. And it'll be a fantastic opportunity at the lows to find some undervalued companies, and markets will continue to market. They just do. It's a beautiful thing. I used to find price charts, as a kid, as a teenager, like I was never interested in it. And then studying psychology in university, and then when somebody made the connection between like a chart is just human psychology painted in candles. And I always thought that was a fascinating comparison. And ever since then, I've been an ardent student of the market, and you can see it. You can see the emotions in candles, the doji, the uncertainty, sideways action, the panic, the capitulation, the liquidations, the euphoria, like it's all there. And it's rinse and repeat, and it will never change. And for that, I find it fascinating and quite unforgiving. It doesn't even matter how well you understand it. It still catches you off guard. It's real. Like these emotional, even today, actually, I was going to bring it up today, the fear and greed for the first time. Oh, I'd say in a few months there, A few months, like June 22nd was, I believe it was a Sunday. It was the last time we saw fear on the fear and greed at a score of 42. And actually just today, we got our first fear print right as Ethereum retested weekly all-time highs. So, or not all-time highs, previous weekly highs from the last years. Catching a nice bounce today, short liquidating some late shorts. But yeah, to your point about the treasury companies, and I don't like coming on here and like bear posting. It's not about when and what price these things, like let's just have the party. Let the people have fun. Number go up. But it will bubble. And as a trader and investor, I love bubbles. So I don't
I can't predict the future, not very. Yeah. You have a very very Zen accepting way to say, it's all beautiful. The euphoria, the carnage of human greed on full display. You just gotta make a friend of it. No, that's the point. Sort of as a foil that it was observing these kinds of cycles that produced the philosophy of nirvana. That what if you can, admit that euphoria comes and goes. There are always moments where money is hot and moments where money is more timid. But if you could lock in the effect of that euphoria, that you could have a pump, let people have fun and buy. But instead of a bubble, build something more like a stair step, up and to the right.
Yeah. Sustainable bubbles. There's tech now. We built it. There's tech now that can actually capture value and make it a property of an asset. So yeah, look, our stuff is going to be on full display in new places and in new ways over time. I have no doubt in my mind that it's a fascinating way to structure a market. It's as a student of the market, I looked at it. First thing I saw it, it's like, whoa, like you've solved for the human touch on the markets, the market making side, how to assign a value to something, et cetera, et cetera. And so I was just on a call with Jedi from Blockmates, and we were chatting, and he was asking like, oh, how are things going? And I said, well, look, we've got so many things coming up, and each one has this opportunity to just draw in a new wave of interest and eyeballs, whether it's Samsara going live with Zen tokens, where we nirvanify any asset on any chain, starting with Solana. And you can suddenly start to understand the dynamics if you're a bonk holder or if you're a SOL holder or whatever the case might be. Initial listings TBD. I know somebody asked in the Discord, what's going to be the first 5 or 10 listed? It is still TBD. But we're going to use bonk as an example because I have a feeling it'll be one. Wink, wink, nudge, nudge. And as those users come in with those tokens, like they just start to learn about this concept, and just it opens the door to a new wave of eyeballs. Now, if we have an AVM integration, which is actually something we wanted to talk about today. It's been a hot topic on a lot of our team calls and a lot of the Discord chats. It's like, I actually think the AVM, and I think you agree with this, in some ways is probably the biggest opportunity here, where there is this launchpad, the very competitive landscape in the launchpad stuff. Heaven with the Light token just went live recently. Bonk.fun obviously stormed into the scene this summer with what they're building over there, and Pump.fun obviously kicked the whole thing off, the grandfather of it all last year, 2 years ago. And it's growing in its competitiveness. Bonk, I just saw today, was making headlines for only having had graduated one token. So it's like 80% share, and now it's like 30%. It's a very competitive landscape. They're all doing shades of the exact same thing, where they're, I'm going to do this with my revenue, I'm going to share this revenue that way. But essentially it's the same thing, pre-bonding curve of these things, where it's like graduating into a liquidity pool. And I think the original idea was that there's locked liquidity, right? It can't be rugged, but it can be rugged by people selling all of the token. Essentially rugged. It's like, well, look, there's still liquidity there. There's like 1.5 SOL for the entire supply, right? So there is still an issue with how they are operated. People don't seem to mind. When you buy into a pre-bonding or a pre-graduated thing, you're buying lottery tickets. You're saying, I'm going to bet today's meme will be this, or the next big meme, the chill guy, the whiff, and I'm going to put some money in there. And it is a product that people enjoy, this rush, the trenches. What if one of these launch pads, 2 or 3 or 4 or more of these launch pads, had a toggle where they could select if this person launching the token wants to launch it where this has a floor? And what would that unlock? And could there be a borrow lend natively built in and leverage natively built in, liquidation free, no interest rates? And I think that's a very attractive offering to one of these launch pads who wants to stand out from the others. And so my focus on the BD side in the next, starting last week, is really this AVM stuff. I think there's a very good chance that this will be attractive, whether it's to the front runners or whether it's to one of the ones that wants to catch up and find an edge. And so, yeah, if anyone's curious about strategy, that's really where my focus is in the coming days and weeks, while we take this thing through and find our way into the next big spark for attention and excitement.
It's a very simple idea that it's very powerful, and the end result is less harm to traders. It's just people getting hurt less with sudden drops for reasons that are malicious or accidental or coordinated or not. Uniswap had this idea however many years ago. It's like, hey, let's use a math function to allocate liquidity from the price of 0 to infinity. And then bonding curves showed up and said, all right, let's create a math function to allocate liquidity so we can support prices from 1 to infinity. That's the only difference between something like Pump Fun and Uniswap. Rather than 0 to infinity, it's some number. We'll just call it 1. And Nirvana is saying, let's use a math function to allocate liquidity so that the price goes from 1 to infinity. And now it's 1.1, and now it's 1.2, and now it's 1.3. That's it. You don't have to have your math function that allocates liquidity go down to 0. You don't have to have your math function that allocates liquidity to go down to 1 and keep it there. You can have a math function that allocates liquidity that goes down to a floor price that also rises as soon as it can.
Mm-hmm.
Why not? Why not? All these are just liquidity distribution algorithms. That's all it is. Uniswap's idea is 0 to infinity. Pump Fun's idea, 1 to infinity. Nirvana's idea, X, that goes up to infinity. It's really an evolution in how this kind of automatic liquidity should be provisioned. And there's very little cost to this. There's very little trade-off. After all, it is just a math function that's laying out liquidity along here or there. There was a comment in the Discord that was touching, which was, what do you think about the price being near the floor? What does that mean? Have any thoughts on the situation that you're monitoring? And honestly, I don't find it bullish or bearish if the price is near the floor. The question is rather, what is the price? Well, the price is up 4x since launch. That's pretty good for any digital asset from last year. It being near the floor is not a sign of any kind of sluggishness, as far as I'm concerned. The floor is just an infinite buy wall, plain and simple. That's usually how I'll explain it to people who aren't mathematically or financially inclined. Just imagine that there are infinite buyers at this price, and they're just there. They don't really affect the market price at all. The market price could go up to 100 or infinity, just like any bonding curve could. And the floor just follows it as a buy wall of last resort. But it doesn't have much of a connotation on what the price is. So in any case, I'm very enthusiastic to change the way the game works. I was excited when Uniswap came out. I was excited when these bonding curves came out because they solved another problem. And I'm excited about this because I think it can change the mood of the space as we realize, oh, wait, if the price is $100, we don't need liquidity all the way down to 1. The fact that we're using an algorithm to set up the protocol on liquidity means we can make the minimal price $50. Why not? Nobody loses.
Yeah, what excites me about it is the potential for products to be built around it and on top of it. It's a new thing. It's a new way to think about a market. It's a new way to structure a market. It's a new dynamic that emerges around it, features that are unlocked, like self-repaying liquidation-free loans. And once it's out there and it's hardened and there's more awareness and usage and humans' creativity is endless. And we see that with things like Uniswap, which came out and was relatively obscure and unused for the first year. And then it kind of grew and got a little heat in 2019. And then summer 2020, we had DeFi summer, and it was like, oh man, you got to learn how to use Uniswap. And I still remember the first 6 months of Uniswap, like not the first 6 months, like 6 months prior to DeFi summer. And my buddy was talking about tokens on there. And I was like, oh, this is this weird thing. Like, I've been to Ether Delta. Like, I don't want to buy there on Uniswap, right? But in the time since then, we've got UniV3 now, came out, UniV4 most recently. And there's the hooks. And like, I'm excited to see what people will start to think about and build and dream up that could be built on a primitive like Samsara. And the most present one in my mind is one that we've actually just recently been talking about and talking about briefly in the Discord as well, is the idea of like a Zen Loans platform or a vault. And one of the things that borrow and lend is used for in the world, and debt instruments in general, is for tax efficiency. And not being a tax advisor, I certainly would not take anything I'm saying as tax advice. But I've worked a lot with my own tax accountant over the years. And not even getting that creative. Like, I've never used massive loans to avoid taxes and stuff like that. I spend a lot of time with them thinking through taxes and all this stuff each year. It's a 6-month tax season. But this Zen Loan product to be built on top of Samsara, essentially the end user experience becomes, I've got some bonk, I paid $500 for it. Now it's worth $1 million. I don't want to sell it and incur a $995,950 or whatever, tax gain. I'd like to maintain ownership over it, but I'd like to access liquidity against it. And if you have a blue chip like Bitcoin or Ethereum, then you can go to Aave and you can deposit it and you can borrow stables against it, and you'll pay 6 to 8% or whatever the rates are these days. Haven't checked. And you could get liquidated if price drops XYZ. And that does happen. Usually every other year, we get a pretty significant drop, and you start to see liquidations popping up on things like MakerDAI and stuff. And so it's not without risk. And it's, and what some people may not know is when your position is liquidated on a loan, say on Aave or wherever else, that liquidation counts as a realized gain. So not only did your collateral just get nuked, but you now owe taxes on the entire amount. And so it's a pretty stressful situation. You got to maintain those positions. Enter Zen Loans, this platform that bootstraps its own borrow lend liquidity with people who deposit their tokens, whether it's a bonk deposit into a Zen bonk market, and then that is a collateralized position that you can borrow bonk against over time. Now get this, this, but I'm going to just, saying this for the people in the back. When I borrow against my Zen bonk, maybe my LTV is 80%, because NBank is trading around its floor price. Or maybe the LTV is 60%. I think the lowest it can go is what, like 52%. But over time, as this floor sizzle occurs and as trigger prices are hit and as more people swoop in to use this product, that floor rises up and your LTV can actually exceed 100%. So I might deposit that $1 million worth of bonk that I paid $500 for, thinking about low cost basis bags here, because those would be the ones it's most attractive for. But over time, say a year later, year or two later, that credit line that I get from the Zen Loans vault could exceed 100% LTV. And I borrow that bonk out of the vault and I sell it to USDC. It's not a taxable event. The sell to USDC is taxable, but it's based on the borrowed amount. You can sell your debt and it's, if I borrow it and it 10x's, then I sell it, obviously it's taxable. But if it's pretty much right where I borrowed it, this is the information I'm getting from the tax experts I've been speaking to. We're working with them closely to harden this design and really make it bulletproof and make it a fantastic tool that anyone anywhere can access, where the buy, borrow, and die strategy that's been for the billionaires since the 1930s is now available to anyone, anywhere. Now I say anywhere because I don't understand tax code in any other country. But for now, it's been optimized and really targeting US and Canada. But again, it is just a borrow loan product, but the dream is that it could be leveraged in such a way to help people access capital against their positions without having to sell them. Because we don't want to sell, right? The nice thing is I want to maintain my exposure. I want to maintain my exposure to these assets, but sometimes I want to tap into them for cash, for capital, for whatever. And this could be an instrument for that. So one example of a product that could be built on a primitive like Samsara, and one that we plan to build. But other people could build other stuff, right? There's a whole world of things you can do when you have this new structure around an asset, and I can't even imagine half of them. So
yeah, the evidence is really mounting as we're designing this and talking to people. And it's very exciting. It's what the world needs now, that you can deposit your low cost basis digital assets into a Samsara market, borrow from the liquidity in the market, and do what you will with that debt without it being a taxable event on financial advice, ****. Yeah, I can't think of another product that solves that problem to give you access to debt. Traditional borrow-ins don't really succeed at this because their liquidity is quite finite. It's quite dependent on the mood of the lender. You won't find millions of dollars of a thing like the bonk token inside of a borrow lend. There just are not the lenders for that.
Mm-hmm.
However, with Samsara, with the Nirvana AVM model, liquidity scales with demand. So as people use this, just like the floor price, which is also a function of liquidity, the liquidity that can be borrowed out just grows as more and more people use this. It automatically grows. So there is no ceiling, which is dependent on the mood of some third-party lender. The protocol is the lender. And if people are using the protocol, it has the money, and who knows how much bonk could be processed through this. There really is no limit. It could be hundreds of millions without the thing slowing down in the very least. Not to mention the no liquidation risk. Yeah, it is these kinds of things where the limit is just human imagination that you build on top of this. Speaking of building, I think we can bring this to a close with a little dev update.
Yeah, show us what you've got. There's a new page.
Actually, yeah, let's get that page live. One second. Well, we're waiting for that to come up. What we've been working on with Samsara the last couple weeks, which we hope to release for external demo this week, is, most importantly to me, a full historical view of every action you take in this system and your entire portfolio. Speaking of taxes, which do matter, this helps greatly with reporting, where you can see every event where you borrowed, repaid, claimed your share of the revenue from the system, whether from Prana or from Karma, when you've purchased, deposited, et cetera, et cetera, et cetera, as well as tracking how many fees that you've earned as a liquidity provider over time. One chart that we're adding to this right now is also a tracker for the total equity of your position. I guess you can see this of your equity across any individual market or all of the someday thousands of Samsara markets. You can see how your portfolio changes over time. This is important, not the very least for knowing what you've done, but knowing how to use this to the best of your ability for tax efficiency. I'm really happy with how this is coming along. So there's a page to track your positions in all markets, as well as an easy button to claim all of the, right here it's called rewards, but more accurately put, and I'll probably change this, it's revenue. It's revenue, that when you are a participant in a Samsara market, you are both a market maker and a lender at the same time. And any operations on the market, when people borrow, when people perform swaps, the fees generated from that go to you and everybody else that's in there. So this is a way to claim the revenue that you've earned from each and every market that you are in. There's another column on here keeping track of how much Prana you have deposited in each of these markets, because Prana is both a source of revenue share. It's used to share out revenue amongst each of these in a zero-sum way, which makes the value of Prana very spicy, in that people will be putting it in different markets that are hot or different streams of revenue that they want, as well as giving you governance power over them. So in any given market, you can deposit Prana into it and have a say in the parameters of that market and also profit from the revenue that it generates. In fact, I want to underline that point, that by depositing Prana into a market, you earn revenue without even having exposure to that market. Let's say you deposit Prana into Zenbonk's market, you just start collecting revenue from it. It's direct rev share. I'm very, very fond of the rev share model, and I'm surprised that it's not more common, because it seems the most effective way to distribute money and the most fair way. I think that's why I'm the most fond of it, is that it's very fair and transparent. Not to go on a tangent too much. I'm going to go on a tangent.
Yeah, here it comes.
Heaven Dex, new launch pad, Heaven, yes. That they... one of their selling points is buybacks, that they use revenue. They're an exchange like Samsara, and exchanges tend to print money, and they promise to use their revenue to buy back their own token. Now, their own token, of course, was launched through an ICO. The team withholds some of it for itself. The foundation withholds some of it. Investors, et cetera, et cetera. And they're using the revenue to buy it back. There's nothing wrong with using your revenue to do stock buybacks, but it's not the most fair thing you can do. When you as a team, give yourself 10% of the supply of some stock, with zero cost basis, you just give it to yourself, and you're using the revenue to buy back this token. You're basically just giving the revenue to yourself. You're creating your own exit liquidity from the protocol. It's much more direct, that if you want to deliver value to your users, if you want to incentivize your community, just give them the money. Just give it to them. You don't have to create a token and then have them buy it, and then you buy back the token with the money. Just skip the middleman and give the money right out. And that's what we're doing with this. That if you want the money, come and get it. You don't have to speculate on a token to earn it.
And we're actually doing both, because the platform revenue is going to be something that we'll put towards ANA buybacks for our own treasury. But like to your point, there was no pre-mine on those. The protocol, the ANA treasury rather, platform will accumulate its own token back for the purposes of funding operations through Boros. So, it's really, like you say, be your own Michael Saylor, and put that model out there as like, hey, this is how we're operating. We have revenues. and we are going to align with our mothership, Nirvana, and essentially buy it. Not really buy it back. I think that's an inappropriate use of the term, but just to, we have revenue. What are we going to do with it? Well, we're going to fill our treasury with this asset that we've created that we feel is a very strong treasury asset. Why? Because we can borrow against it without having to sell it.
Yeah. Good point. Yes, there's both the direct revenue to the users, and then there's also the portion of the revenue which is held back to fund the development of this app. Portion of the revenue held
Pay
back.
The bills.
Pay the bills, pay the devs, pay the auditors, pay for marketing. And what we do with that money is just buy and hold the ANA token, full stop. So there's money coming from all the different Samsara markets, a little bit of JLP, a little bit of Bonk, a little bit of this and that, and all that just gets boiled down to buy and hold ANA. Now, we are our own treasury company in that sense also.
Mm-hmm.
And when we need to pay the bills, we just collateralize the ANA and borrow, zero interest, zero liquidation, and that is fine by us.
Yeah, and to your point, there's. Oh, go ahead.
I'm done.
Okay, I was going to say, to your point, there's just really two splits here. There's platform revenue that we'll use to buy back and hold ANA and borrow against when we need to fund things, and then there is the protocol revenue that will be doled out to participants, whether that's the Prana stakers on the earn page. Actually, if you click there, that'll highlight the point. But you have Prana stakers, and then the actual Zen token participants. Would be a shame for them not to get a piece of the action that they're generating, and so that's where karma comes in, and you can actually see it live ticking upwards, which I love. It's a nice touch on the UI, and it'll highlight the percentage of that portion of the revenue that you own. And then, of course, the third bucket on the protocol side being the floor itself. We want that thing to come alive. We don't want it to be trigger price dependent. And so a portion of all dollars that are brought in on the revenue side go directly into the floor itself. So the borrow capacity for anyone, say, using a Zen Loans position will just tick upwards over time, which is pretty crazy to have a credit line that just expands with usage.
Pretty crazy. Yeah, the more people use this, the bigger your credit line expands.
Yeah, and there's a lot of pieces in that pie, and they're governable. So, this market may choose to sway itself towards Prana. Good luck with that. I don't think the market will be as popular if it's 99% Prana and nothing to the floor, nothing to karma. But another market may choose to say, 99% of this protocol revenue is going to go straight to the floor. We don't care about the yield. We just want the floor to go up, and it'll be its own little meme. And I really like the design choice to have each of these individually governed. So we're going to just let the market decide and find out, what thing works best, and have some memes launched directly into this thing. I think eventually, be kind of fun to have launch a thing called floor token on pump.fun, graduated, and then build a Zen token on top of it. I don't know. I think again, going back to the kinds of stuff that people will come up with and do with this is it's quite an endless ocean of ideas that come out when you have a new primitive like this. Real quick, I want to get to some questions. Blah blah Lord has a few questions. I specifically asked for interesting questions, and the reason I use the word interesting is I want something that's interesting to talk about. If it's like when this, when that, I'm probably going to ignore your question. Just a heads up. But blah blah Lord, in all his great wisdom, has presented us with a few interesting questions. So appreciate that, sir. The first one is, what are the plans to onboard people to ANA apart from Samsara? We talk a lot about Samsara and growth and eyeballs, and that is absolutely a big key part of just spreading the lore that is two-lined tokens. And so I can answer the second piece. And there's been a slight, I wouldn't even say pivot in the fundraise where, we're raising funds by selling future platform revenue on the Samsara side. And that's been very successful to this point, just about 50% filled on that since I joined, working hard on that every week. And for the remainder of that, we're really focusing on KOLs, influencers, strategic investors, people who will bring kind of attention, eyeballs and stuff. There's a lot of fantastic accounts out there that, they may not even take payment. I'm not a big fan of, $15,000 and I'll tweet about you. Like, okay, have a nice day. We're not built like that, and we're not really interested in that. But I know a fantastic group of people are out there that would find this product interesting and that would be happy to invest and align with it long term, and who happen to have a large platform of their own and an audience of sharp individuals that participate in the market. So as far as growth and eyeballs go, that is apart from Samsara, which is still kind of tied to it because that's the future revenue we're selling. That is the remainder of this raise will be entirely geared towards that, and we're just stirring that up this week and kicking it off. So to your question, blah blah Lord, that's one of the main plans, at least from where I'm sitting and what we're focusing on. And the next question I think will be for you. I think it's a pretty easy one. It just says, how many coins are planned to be launched at the start? Question mark, more than one? Question mark. I think the answer is yes, more than one.
Oh, yes.
You think about this probably. We don't talk about it a ton, but when you lay awake at night in bed, what do you think when you imagine launching Samsara? Right now, the DevNet has 3. The number 5 comes to my mind a lot, and then the range in my head is 5 to 10, but we haven't really zeroed in on that. What are your feelings on it?
This is more an aesthetic decision than anything. It's more a question of the kinds of partnerships that are excited about this, the number of them, but there is no limit. One of the interesting things about Samsara is that if we were to launch with 10,000 markets, there's not actually dilution. Every market begins from zero. Every market requires no investment in liquidity to make it capitally efficient. There's nothing that prevents it from being hooked up to take every single new token that gets created on Solana, and it automatically has a Samsara market built into it. Why wouldn't you do that? Aesthetics. I think the best way to roll out is to start focused and then accelerate and accelerate and accelerate more. And at some point, because there is no real cost to have literally every token on every chain with a Samsara market. No cost, but just the cognitive load of sorting through all of it.
Filtering systems, yeah.
Yeah. The why not question becomes very hard to answer. Why not have 200,000 tokens traded on this?
I have an answer for that. Yeah, I can tell you why not, because they're all. I'd like it to be ideally quality. I'd like to focus on quality. I know what you mean, though. Philosophically speaking, why not?
Yeah. And so it's aesthetic to just say, let's have some quality, highly visible, highly active, highly traded assets on here. Yeah. Just start there. That's great. I mean, crypto is a very long tail. There are very few tokens out there that actually capture a significant portion of volume.
Relatively speaking, I think there was something like 30,000 launched yesterday. So like that just gives me shivers when I hear that. And we know that the nature of like liquidity matters, and 30,000 with a total liquidity of 20 million. So, maybe 10 of those are tokens that are worth looking at. But my thoughts on it are that I want them to do well. I want them to be interesting. I want them to attract attention. And if you launch with 1,000, 99% of them aren't very interesting. There's just no liquidity and attention out there. So strategically speaking, the thought is to start with a tight quality group of blue chip assets that have, like you say, lots of trade volume on exchanges and lots of holders and users. And that's really a proof of concept to me. This first tranche of listings, of whether it's 5 or 10, my feeling is it'll be between that number. And it's a proof of concept. It's a chance for them to work. It's a chance for people to look at them and touch them and play with them and figure out how it all works. And then, like with the token markets themselves, we bootstrap further listings with like the demand is kind of what's going to drive beyond that. And it may be the case, it may be the case that a lot of these projects, they look at us, they say, hey, good luck. That's cool. Sounds good. I really want that to go well for you. Like, we're not going to partner and co-market that. This is a new nascent derivative that we're not entirely sure that we want to align with just yet. And that may be our first tranche. We're sifting through those discussions right now and getting some very excited partnership interest from pre-TEG tokens. And getting a little bit more guarded responses from post-TGE tokens with lots to lose, so to speak. And that's just honestly what's happening in the kitchen right now. And we're just navigating that. And I think this initial tranche of listings, to me, feels like 5 to 10 is the right number. And the reason I bring that up is because his next question, he listed 6, is, will all of the initial listings be all partnership based and exclusivity, or will some be launched without support from teams directly? And the answer is that some will be launched without direct co-marketing, and that's fine. It's a new derivative.
Bitcoin.
We're not going to ask Satoshi to endorse the ZBTC or whatever Bitcoin derivative we choose to list with. I am, I've been hearing a lot of good things about ZBTC. We're going to go off screen share now, just a heads up. And so, I'm a fan of ZBTC, and there's a few other options. And I really like having a Solana based one just because it's a little more accessible to us now. But that is a huge TBD. We have talked about it since I joined the team in April. There's really been no final touch on which Bitcoin will be. I think it's fair to say it's not going to be listed at initial launch. Is that something it's fair to say?
Oh, what was the phrase? TBD.
TBD. Yeah. I personally want this thing to have a little more penetration in mind share before we would list that. I think Bitcoin's going to be the biggest one, and it's not even going to be close. And so, to me, it's a wait and see on that one for second tranche or third tranche. Question on the Nirvana audit situation. I don't think anything's changed. It has an audit. It's not listed as it was on the old website. So when we do upgrade the website, there is a new website coming. Right now, we've got that fresh new landing page, but there's an evolution of that that's on the way. We just looked at wireframes last week, or earlier 2 days ago. And I guess the question is is there new audits? And if there are, can they be listed there? And I think the answer is most certainly yes.
The answer is most certainly yes.
I want those things to be front and center. I think the first thing you see when you arrive at such a DeFi app is, audited by XYZ. So that, yes, to your question, those are coming with the new website. And then questions about governance changes. With the new Nirvana update, will governance step change to 10% change rate instead of the current one? And then is there going to be a change on Prana execution? This has been a topic that has come up, execution fee. This has been a topic that has come up in the Discord, and it's come up in side chats and all these things, and people I've talked to, and they've looked at this and they say, oh, this is my quant team, and the model works really well and it looks really cool, but this Prana realization thing and the fees associated with it, they create an imbalance in the force, and there's a floor weight problem. I wrote like a thesis on this before I joined the team. There's no final decision on any of that, but do you want to talk about that for a little bit? I know it's something you've chewed on and mulled over a period of months. It's
yeah. Prana is a very interesting asset. There are a lot of variables lurking inside of that token. That not only does it give you access to revenue share across all of Samsara and Nirvana in a zero-sum way, it's competitive, where you're going to pull your revenue from, but it also gives you governance power across all the Samsara markets and Nirvana itself. And then in the case of Nirvana, it can be spent as a sort of call option, a perpetual call option to get the ANA token itself. The reason for that is the monetary value of it should be based in something, rather than needing to create massive liquid secondary markets. Why not just bootstrap off of the liquidity of Nirvana itself? Why not use Nirvana as a way to provide value for the Prana token? That's where this option thing comes from. The value that Prana has as an option obviously goes down as the market price of ANA nears the floor. This is a design that counterbalances the incentive to exercise your Prana. If you were exercising your Prana at the floor, you are burning money. You're not profiting at all, and you're missing out on permanent rev share in perpetuity and governance power. Now, if the market price is high above the floor, there is an opportunity to exercise it. And you have to weigh that against how much revenue could I make if I hold on to this for time? How important is it for me to be able to govern, eventually thousands of different Samsara markets, for me to have an opinion that matters on them? The fee on Prana, the fee on realizing it, on exercising it as an option, is another counterbalance that goes into that equation. So you're thinking to yourself, I could exercise this, but I'm going to miss out on all the rev share in the future and all the governance. And then the fee narrows in on what your profit would be. It just takes a bite out of your profit. The fee is quite low right now. And it was low because when Nirvana was launched, there was not a plan to do this horizontal expansion. Prana was always just going to be this thing that gives you governance power and rev share. And if you want to exercise it as an option, why even take that big of a fee? I mean, that's what its purpose is. Now that there is more going on, it does make sense to increase the fee rate for Prana. I think the arguments are quite compelling, or at least increase the rate by which governors can change the fee.
Yeah.
If this is the change, if this is a direct change to some of the mechanics of the protocol, some of the parameters, not through the governance system, I truly hope it'll be one of the last ones ever, because it's very important to me that no change to this protocol is done from central authority. But what's been brought up in the community is maybe we turn the screw just a little bit, just alter the rudder, and then let the course go as it was, where the community of governance token holders decide from there. So it's a decision that's being weighed. It is something that happens hopefully very rarely, to make this kind of minor course correction. Again, the course correction here being the rate at which governance changes affect that value, or giving that value a little kick to just move somewhere where it seems like the prevailing majority want it to move. In the end, this does not matter all that much in the long term. If the value were kicked up and the rate that governors can change it also gets kicked up, and they don't like it, you can just move it right back down quickly.
Yeah. The rate change is interesting to me. It's something you mentioned, and we talked about it in terms of Samsara. What will be the rates and what will be the starting values? And there's been some debate on that. And I've chatted in the Discord. Some people asked, the fee rates will be higher to start. I think probably 50 bips. The thing is, and I wasn't around pre V2 launch. I was in V1, but not in the Discord. And, coming in, and this is something you said, as, I introduced you to a few people early Q1, like January, February. And one of them had a quant shop at his fund, and he was looking at this, and he's like, hey, can you dig through this? As he was doing his due diligence, he asked him, and they went through it all, and they brought this to our attention, that the imbalance that would potentially be created by a low exercise fee, and how that might affect floor weight into the future. And so, there was a lot of interesting debate and talk on this from some fairly smart people that, I just listen to. I don't really know how to lean into the math the way they do. And it was actually two separate quant shops that came with the same conclusion, which was that this thing, when it comes to like incentives, and then, how fees and everything should all be put together, they both identified the same issue, and both of them pointed at the realization fee. And so, that's where this whole debate started, at least from where I'm sitting, and it was introduced to you, and something that's been brought up even independently in the Discord. And so, yeah, I think when you have this kind of data now, 8 months later since launch, and you've collected a whole lot of data, as you pointed out, and you say, well, we know more now about this whole thing than we did before. It stands to reason that, if there's a fairly important change that needs to be made, personally, I like to be part of a protocol where somebody can make that change. I think immutability is very cool. And I think at some point down the road, immutability always should be the goal. But you don't want to kind of cut the cord before you get things just right. And I think, to your point about changing the rate, think right now, let's pretend it's 5%. I think it actually varies between markets and votes. But, if it was 10%, I did the quick math on this. That's as much quant knowledge as I have. But a 10% rate change, you get a double in 8 weeks, just over a double. And you can cut a value in half in about 8 weeks. And that's not nothing. 8 weeks is not too fast, but it certainly makes things a little more spicy, a little more interesting. If it takes 2 years to change a value from X to Y, like, good luck, have fun with that. It's not that interesting. And then, the incentive to be a part of that change is very low because it's not very impactful. So too slow, really hurts us. Too fast is insane and harmful. I'm really enjoying the 10% after we ran through it all as a team a few weeks ago. So, to your question, blah blah Lord,
Yeah.
TBD. But I think this is the thinking that's going in around it, and whatever happens with any kind of discrete changes that are made, the rate of change, I think we're pretty settled on increasing, right? So that, like you say, if it lands somewhere where the majority of prana holders don't like, they won't have much of a hard time changing it to where they do like.
Yeah. If you were to hold my feet to the fire, yeah, the rates are just a little too slow, the rates of change. This is a security issue, and it's really the main issue. It's not the particular value that matters so much as the rate at which it can be governed and altered. And Nirvana's security model is inspired by blockchains themselves, and especially Bitcoin, where in Bitcoin, it gets its security from its slowness, that it takes a long time to produce a block. And so it takes a long time to produce many blocks. So it takes a long time to take over the network. The slowness is what keeps Bitcoin rock solid. And there's a trade-off. And there were spin-offs of Bitcoin that wanted to have faster block times, and that is necessarily a sacrifice in security.
And they got 51% attacked.
Did they? Okay, yeah. That's the thing that has been drawing this decision out. When you raise the change of rates, you can make governance move values faster. And the possibility of somebody accumulating 51% of the prana and pushing things around and maintaining that 51% of the prana for a long enough time to get what they want becomes easier to do if the change rates are faster. So you want to balance being able to be nimble and make changes that you want to make without needing to worry to battle one of these. I highly doubt anything like this could ever happen. It would be ridiculous for somebody to accumulate that much prana and then have any malice towards the Nirvana protocol. But this is meant to last forever. And so it's good to balance security with a feeling of impatience in times like this. I agree that it's a little out of balance. It's a little slower than I think what most people's taste would say it ought to be.
Well, yeah, and to your point, if it's too fast, the security issue is an interesting point, and not really one that I had thought about, to be completely honest. It's from design before my days, and that's an important piece. But then, as far as that goes, then I think the line you want to walk, and this is just speaking off the top of my head here, would be like, how fast could you make it such that there is no significant security risk increase? But because the faster it is, ultimately, it just makes the whole thing more engaging and exciting and important, right? We want prana to be desirable, something that is important for you to have, not exercise, because it has an impact. And the greater the impact it can have and the amount of time it can have that impact, the greater its speculative value, in my opinion, as a governor. So I think that's the line we're walking, and I think we're landing at 10%. If I had, foot to the fire today, I believe that's where we landed on Samsara, and it makes sense we would just keep it the same for Nirvana. I cannot stress to you enough, guys, how much I've put, this my voice in these meetings has all been about, let's make this simple. It's a new thing. There's a lot of complex new ideas. They're not easily comparable to anything else. So when we have an opportunity to make something the same as something else, or simple, or understandable, I'm really pushing for that. And that brings me to the next question, and maybe the last one we'll go over today, and a great one from Blah Blah Lord, which is why Zen token was launched with an equivalent to $1 and not 1-to-1 with the token itself. And I've got a screen share here ready when our producer pulls it up. And I want to explain that. I'm excited for this one. I think there's a great reason for that. It was my idea. And because it's my idea, I can't wait to tell you. But it makes sense. And I really want to get this screen share going, AJ, when you got a chance. Yes, there it is. So, oh, yeah, boom. Okay, so looking at these now, we have 3 different assets. They are priced in their underlying collateral. And so that's a little confusing. How do we compare them, right? When I come here to this exchange, I can't tell at face value Zen Sol and Zen Bonk and Zen JLP, how they may have performed relative to one another, which is the hot one. It's a little tough to say. And there's something that Pump.fund made normal. They normalized the 1 billion supply. So when you look at a token and the prefix or the suffix on the token contract says pump, you know it's a pump fund token. And you know if it's trading at 1 penny, that it is 1 million market cap. Is my math off? Oh my God, 10 million? I don't know. If it's trading at $1, it's a 1 billion market cap. It's very easy to look at the price of a pump token and estimate or know what the market cap is. And there's a consistency there that I think really works. Now, if we started off, to your question is like not the one-to-one with the token itself. So example, Bonk should start at 1 Bonk. Why not? But then Sol would start at 1 Sol. It would cost, the first one to mint would cost you 200 and however many dollars, or today like 186. And so they wouldn't really be as easily comparable. And they would all be living in their own little worlds, and there would not be that same cohesive feeling you get from something, for example, like Pump's 1 billion supply. And prior to Pump.fund coming out, and really still ongoing reality of all these tokens is that they all have different supplies, and some of them are capped and some of them are not capped, and some of them have max and don't. And so you end up with, it's a very tricky thing to compare. So you have things like FDV that are helpful, but not intuitive when you look at just the value of each token. So Nirvana's ANA token started at $1. In an ode to that, I think that the selection here of each of these starting at $1 in their token. So for Sol, that'll be some decimal of 1 Sol will be the first price, but it's equivalent at the time of launch, call it a 24-hour TWAP, whatever that is, average price over the last 24 hours. $1 of Solana will be the cost of the Zen Sol token at launch. $1 of Bonk would be the cost of Zen Bonk at the start. And here's the effect you get from that I think is an important one, and one that I like, one that I think people will like. When you look at these and you see the US dollar equivalent next to it, Zen Sol is trading right now around $20. What is that? That's 20x. It's 20x from when it first launched. Zenbonk is trading at $14.60. That is 14.6x from where it first launched. You can get a sense here how they're performing, how their relative Zen tokens performance is versus the asset that most people trade and think in terms of, which is US dollars. Zen JLP trading at $9.33. It's up 9.33x from the launch. And so I think, to your question, that is the decision that was made, or that was the idea that I had. And that's why I think auctioning these all off with a $1 starting point is just another piece of alignment and cohesion between Zen markets that'll just make it a little easier to understand and compare. And then, that gamification, people that come in just to trade these things, the same way you talk about these meme coins as like, oh, it's going to 50 mil cap, it's going to 20 mil cap, it's going to 200 mil cap. And you have that relative comparability because they all have a 1 billion supply.
Yeah.
That's the thesis.
Yeah, and it's sound. It's sound. Ultimately, it just comes down to psychology and a matter of taste. It works exactly the same either way. Whatever you pick to be your independent variable, then you get a different one that becomes dependent. And so start the token at $1 or start the token at 1 of the base asset, and everything works the same there on out. But
you don't want Bitcoin starting at 1 Bitcoin. That's the other issue, right? The value of these things, the really, the high cost ones, and they're not always even high cap, right? You have some lower cap coins with high costs. There was whatever last year was a, I don't know, Pokemon sounding ticker. Anyways, it was like a $10,000 token with a $40 million cap. Like, I just think this is a clean, nice way to enter the market. $1. Starting the bids at $1, please. Like, it just makes sense to me. And I think it's more intuitive for randoms and other traders and whoever's.
It does, yeah. To know that every Zen token basically starts within the same zip code.
Yeah. And that's, like, as we take on this new derivative and we proliferate it across chains and into new places, and each one will have a relative dollar value tied to its bonk cost. This right now is 656,000 bonk to buy 1 Zen bonk, but that's $14.60. And let's be honest, most people trade things against US dollars. And so that's an important data point, and it should be consistent. So that's the questions from Blah Blah Lord. I see a couple others in here. Let's see here. Somebody's asking about like another nirvana.finance.io, if it's misleading or sabotage. It's not. It's just another company with a similar name. It happens. Yeah. So that's it. Maximilian. Okay, last question. Prediction markets are becoming perhaps a rising narrative. Is this something you have in mind? Have you perhaps initiated conversations with any such projects? That's an interesting question. I have not really thought about any like how we would fit in with a prediction market, but I'm not saying it's not possible. It's just right on the spot. I haven't actually thought about it.
On the spot, that I'd say that this is an ill fit for the brand. The purpose of a prediction market is to distribute the winnings in some Boolean way. It's like everybody gets the take if they got it right. All of the money goes to one side or the other. The purpose of Nirvana is to store value. The purpose of Nirvana, the central idea of Nirvana is to have a protocol rather than a human in charge of making sure that this asset is liquid, which is another way of saying storing value, because asset without liquidity has no value because you cannot sell it. And so it tackles a pervasive problem in crypto, which is liquidity is not connected to market cap, is one way to put it. You can have, those are independent metrics for virtually all assets. As far as prediction markets go, where I sit right now, I don't see much room to improve. It's basically just a way to do price discovery for placing bets, having odds set by some smooth mathematical function.
Wisdom of the crowd.
Yeah, and then doling out the winnings. They're cool.
Question. Cool. There's a clarification here, and his question actually was specifically about their tokens. So if a prediction market has a token, I know a few of them that are out right now that, they're actually, it's a good point. Shout out to Maximilian Cray. He's got some alpha there. The prediction market tokens are running hot right now. And could they have a Zen token market? Absolutely.
Yes.
Yeah, like 100%. They're in our wheelhouse for sure.
Yeah.
And,
yes. The other main attraction for a model such as this is self-bootstrapping liquidity. Yeah. And so for a new project that wants to launch a token and do it in a way that completely sidesteps the usurious market making deals that you typically have to do, where you exchange a pound of flesh for a listing here or there and having liquidity, you don't have to do that anymore. You can just launch your token through here and have the price protection to the downside. Yeah, so I wouldn't say that's germane to prediction markets in particular, but up and coming projects that haven't yet decided on a strategy to make markets with their token would launch through this platform and enjoy all the fruits of it.
Yeah, absolutely. And side note, just because I love this book, if y'all are interested in prediction markets and the whole concept of predicting outcomes, you should read Super Predictors, The Art and Science of Prediction, or Super Forecasters, The Art and Science of Prediction. It is a fascinating read. You won't regret it. Probably one of my favorite non-trading books. And TLDR, a large group of random people with no particular expert skills are better at predicting outcomes than a small group of targeted experts. Mm-hmm. And that is why prediction markets are so accurate, because it's the wisdom of the crowd. Put your money where your mouth is, lay your bets. And to incentivize predictions like that, I mean, I love prediction markets. I find them fascinating. They are, and like when something's 4% likely to happen and then it happens, it wasn't wrong. It's 4%. Give the weather guy a break. He said there was a 4%. There's a 90% chance that there's no rain. I'm pissed when it rains, but he wasn't wrong. Anyways, don't get me started. It's a rabbit hole that I love. But Super Forecasters, Art and Science Predictions, super interesting book for anyone who's just trying to understand the world around us better.
When we're all done with this, when everything is done, Nirvana, Samsara, and every integration is complete, let's make a prediction market about prediction markets.
There you go.
That you predict whether this prediction market will have a 67% hit rate with reality.
Yeah. prediction market inception. Okay.
Yeah.
With that, yeah. And he said, yeah, super interesting. Anyways, it's friggin' awesome. Just dig into that book. It's like, I don't really, oh, can you get me started? Can I get started? No, but the NFL, people are like, oh, how does Vegas know what the spread's going to be? Like they said 7.5, and then the team wins by 7 all the time. It happens so often. They're not magic. They just set the line within milliseconds. Smart money moves that line. And then over the period of the week before the game, the line just drifts 1 or 2 points here. And in the end, it's pretty much bang on in the middle of the money. And go figure. It's extremely accurate. Wisdom of the crowds. Anyways.
The spreads.
The spreads in sports is where I got into it, because I was like, how the hell do they know all the time? And it's because like Joe Schmo knows the point guard on this team. And so he knows a little something. So he bets, and that factors into the point spread. And then this guy, it's the collective random wisdom of everyone in the world just getting together on the outcome of an event. And sure, they miss by a lot sometimes, but they are ridiculously accurate. I mean, how many times you've seen the last 6 seconds of a basketball game just tick over the spread? It's crazy. So that is all wisdom of the crowd stuff. And that book is probably the best thing I've read on it. So get after it, guys. I just want to do my same old tagline at the end. Remember, always play from a position of strength at the end of my streams. But that's it, guys. That's all we've got today. We're at the 124 mark. I think that's healthy, savvy. I really appreciate the interesting questions. Blah, blah, Lord. I hope you're satisfied with the depth of discussion on those. And yeah, we'll be back in a couple of weeks, which is when school starts for those of you with kids. Those of you
As they say in my hometown, here's a sports reference for you. We can end here. Clear eyes, full hearts. Can't lose.
There you go. Love it. Thanks for coming out today, everybody. And we'll see you in a couple of weeks. Cheers.
Bye-bye.